What's up, everybody? Welcome back to Go Broke Investing. I'm your co-host Leon Daniels, and we got Jiz Clerk here. And
Hello.
this in this episode, we're really going to talk about inflation, right? That's the buzzword that is happening right now. Everybody's talking about it. The cost of goods is going up. The cost of everything is going up, but we really wanted to define it and then give you a couple different ways to combat it. Jiz has like some quick information here, an overview of inflation, what's driving it. So go for it.
All right. Hello, everyone. It's not so much a definition, but I was looking at some headlines, and as Leon mentioned, right, people have been talking about inflation more and more these past couple of days, but it's really been a problem for a few years. And one of the things for me is it is a bit concerning when you have your quote unquote experts in the financial world who come on the various news articles, and they make their interviews, and they talk about what the economy is doing, how families are doing, and people have been raising a red flag about inflation. Basically, to break it down, inflation is talking about your buying power, right? So if you have, let's say, $100, and people always talk about, oh, my mom used to go to the supermarket and she used to be able to fill up a shopping cart with $50, right? And then 10 years pass, and then you go, $50 can't get you that same shopping cart. It only gets you half a shopping cart, right? So it's basically saying your dollar goes less over time, but what impacts that, right? So there's a lot of different things that impact individual things. And this is one article from NPR, and they're talking about grocery prices. They're talking about various food items, and then they're talking about gas. So those are the different things that people really look at. They always look at, okay, how much does beef cost? How much does chicken cost? How much does gas cost, right? How much does it take to fill up my tank? And then people look at their electricity bill. People look at their gas bill for people who have, heat their homes with gas. And those are the things, what they call, kitchen table conversations. And one of the other issues that you don't really see people talking so much about is what led up to this, right? So one of the things is just basic supply and demand. When you look at the dollar, right, the more dollars that we have on the market in circulation, the actually less the value of that dollar is going to be, right? So just without getting too heavy into the history of it, right, back before, a lot of countries, they used to back their money with gold, right? The US, we used to back our money with gold. Then we broke away from that so that we could have a little bit more flexibility. But because of our dominance over the world, other countries still accepted our dollar, and we became the reserve currency as opposed to gold being the standard, right? But what that allowed us to do is now we're able to make more money, print more money, without having actually have it backed by gold and having to hold gold in reserve.
Yeah, and to go back to what you were just saying, I believe that we came off the gold standard during the Great Depression years, or right after the Great Depression years, and that was during FDR's time, and it was a move that they made in monetary basically policy, which they knew would create inflation, but it was the only way to bring the economy out, or the country up at that time during the Great Depression. And that's the system we've been on ever since. But to kind of circle back to what he's saying, so basically your purchasing power is now degraded because we're dealing with inflation, and you may not necessarily see it directly, but like you said, it's been coming for years. And when you see it, you see it reflected in the prices of things throughout the supply chain. So every company is having to deal with inflation, And how do they combat inflation? They raise their prices, and prices along the supply chain continuously, as materials are assembled, cars are assembled, metal costs more, labor costs more, so they raise their price. So if your wages don't increase, you can't afford things. Well, then if they increase your wages, then you can afford things, but then they have to charge more. So it's kind of like a vicious cycle.
Yeah.
But one thing that we wanted to do in this program was to talk about different ways to combat inflation, and you can do that with investing, right? Smart investing. A lot of people invest in bonds, treasury notes, things of that nature. At the current rate, I do not believe there's anything out there keeping up with the rate of inflation, except for crypto. I firmly believe that crypto is. And you might be like, if you're listening to this, you're like, yeah, but if I invest and the asset depreciates or loses value, then I'm losing that way. Well, I'm here to tell you, there are stable coins and there are staking that outpace the inflation percentage. And I'm not sure what it was, but I thought I saw right there is the average price of chicken is up 8% or something like that. So one thing that I wanted to show you about crypto that I've been telling a lot of friends about lately is something called Gemini. So I'm going to share my screen here. If you're watching online, you can see it. But if you're listening to the podcast, the website is just gemini.com/earn. So right now, Gemini is offering 8% APY on their stable coin. So we talked about stable coins a few times in the podcast before, but it's essentially just do you want to explain stable coins, and then I can bounce back into this?
Yeah. So stable coins are basically supposed to be $1. So different platforms, different companies create their own stable coins. As you see, Gemini has their own stable coin. The more other popular ones you have is Tether, USDT. We talked about, as Leon said on previous episode, about USDT versus USDC. And basically what they said is that it's a digital cryptocurrency, but it's only going to be $1, and it stays $1, and they back it by either US dollars or other assets, so that collectively it always stays as $1.
Right. And so as people exchange into a stable coin, they match dollar for dollar with the United States. So as people transition their money into that stable coin, then they have a count, and as it goes back into US dollars, then they burn those coins, right? So they keep it keeps the crypto steady at $1, and that's the goal there. But what I want to talk about is the Gemini dollar, right? There are many different stable coins out there, but the Gemini dollars is one that I like and that I tell people about. So if you go into Gemini and you open up an account and you put $10,000 in, you're going to earn 8% APY. Now that's not APR, it's APY, annual percentage yield, which we will get into in another episode. However, if you're earning 8% and let's say inflation is 6%, now you're combating the inflation and the purchasing power, right? Because if your money is just sitting in a savings account somewhere, it may be earning 1%, and that might be generous. And so while you're investing in stocks, maybe you're investing in bonds, maybe you're investing in ETFs that are paying dividends that are much higher, 3%, 4% dividends, and that's appreciating. You can also come to a website like Gemini and what they call diversify and put some of your money into this stable coin. And they've got a chart here with $10,000. The projected 2-year interest is $1,600. So these are things that you can't beat. And one other thing that I want to talk about with Gemini is if you're a long-term investor in, say, Bitcoin, Ethereum, well, they offer the same thing for Bitcoin and Ethereum, albeit, I mean, they aren't the greatest rates. There's a lot of different places that you can invest your Bitcoin, like to stake and earn and things of that nature. But Gemini is just a platform. It's a friendly platform. I like it.
Yeah. I think that's a very important point. For people who follow crypto, Michael Saylor, he's a very prominent influencer now, trying to get people to adopt crypto specifically for what you just went over, talking about hedging against the dollar. And he uses his company as an example and saying that the profits that his company earned, they were just holding them pretty much in an account, and they're, just gaining whatever interest they would get from being in the US dollar. And he realized over time, long term, he's losing because of inflation. So his whole strategy is that he took his entire company's reserve cash and bought Bitcoin, and it's all Bitcoin now. And of course, this is for if you believe in the asset and you're, like you said, in it for the long term, you can either just gain profit off of the appreciating value of that asset, or you can do, as you said, also put it in as stake it, so that you can gain interest at the same time that the asset is appreciating. So you have multiple plays here. If you're very conservative, then the stable coin is an option for you. But if you do want to invest and you want to see more compounding growth, then any of these cryptocurrencies would be one way to do that.
And I mean, you bring up a valid point. Like, large companies, billion-dollar corporations are adding Bitcoin to their books. And there's a lot of people out there that do not believe in hedging with crypto. Okay. I mean, the value of your dollar is, every day it's losing power. So, I say, why not? But that's just how I think about things. But I brought up Bitcoin here, right? On Gemini, right? So let's say you invest $10,000 USD into Bitcoin, you're going to earn a 1.49% APY. That's not a lot, right? But it's $300.22 projected 2 year. But that's at the price of Bitcoin currently of 64,167. When you put your money into one of these types of accounts where you're earning interest, well, the interest, it doesn't come back as dollars. It comes back as the currency. So the currency that you get back is Bitcoin. And as we know, at any point, Bitcoin can go parabolic, and the price can raise. And now that, $300 becomes $400 or $500 or $600. And so that's an important factor here. But there's so many different other coins that you can get into that are maybe up on the come up. Let's say if you bought Filecoin at $25 and you're earning 7% interest, they're paying you back in Filecoin, and then guess what? Filecoin goes to 120 or $200. Well, all that compounded money just grew for you.
That's a great point, especially for people who don't have a lot of residual income for them to dollar cost average in on a weekly or a monthly basis, right? Maybe they could only put in one lump sum investment, right? But you have these assets that are going up. Now your overall balance is going to go up, not just off of your interest, off of the appreciation of that asset in itself. So I think that's something that people really need to look at. And again, right, you can, if you want to be conservative, you have the stable coin play, but I think you can try to have a diversified portfolio in crypto where you can have a chunk in a stable coin investment, have that consistent interest that is staking, and then get a little more risky with one of these cryptos. Bitcoin for me I understand it. If you don't understand it, research it and understand why so many people see it as a conservative play. But then you have other assets out there that'll be a little bit more speculative, and then you can see why they're giving 7%, why you can get on some platforms 12% for a polka dot, right? So there are options out there.
Yeah, I mean, and if you're listening to this and you say, I can't afford to invest, I would tell you, you can't afford not to invest. It is just basically that simple. I we're not, again, when we started this podcast, we talked about we're not financial advisors, but we wanted to get this information out there because, as I've talked to friends all throughout the week, and they just had no idea these programs exist.
Yeah.
Right. And if you're scared of any kind of asset that fluctuates, the stable coin option is like this. I would choose a stable coin that earns interest over a savings account any day.
Yep.
Because then I don't have to worry about my money fluctuating or anything, and it's just accruing interest.
Yeah. And then another thing too is, like, without being, a conspiracy theorist or an alarmist or anything like that, right? This stuff is there for you to see. As far as talking about inflation, the sad thing about it is we're getting to what you call a perfect storm, right? Or some people call a black swan event. You have the pandemic, which we're slowly recovering, depending on who you're talking about, which income brackets, right? You have the supply chain, which partly was connected to the pandemic. You have the inflation, where the government, the Fed, was creating and printing money to help stimulate the economy, but it's not hitting everybody equally. So when you put all of that together, you have other certain things which, again, right, there have been reports over the years of floods and droughts in all of these different states and these different countries where agriculture is the dominant form of revenue. So if they can't produce, right, they keep talking about we're going to start to see products, not enough products in our shelves. And this is not because of the pandemic. This is a separate effect, right? But bring it all together, again, what is it going to be the end result? Prices are going to go up.
Right. And what he's saying is, if we use that example, a tomato farmer, right? You use tomatoes for whatever, and you go to the store and there's like 10 tomatoes on the shelf, right? Not only are those tomatoes probably going to be $10, but when they're sold out, what he's saying is it could be months before you see tomatoes again. That is how affected the supply chain is right now. So again, look at other assets. I mean, invest. And when he says it didn't hit all people the same, what he's saying is, for us, for the common people of the world, it hit us harder than it hit the guys with the big pockets. And it's not so much an elitist thing. It's they know how to invest. They see things coming, and they have assets. They have art. They have physical assets that they could sell. They have real estate. They could sell things of that nature. We, in the middle income and lower income brackets, we don't have those types of assets. And so that's why this podcast exists, to educate you on that thing. So great show, man. And again, we thank you for joining us.
Yep. Stay tuned for the next one. We'll keep bringing you information that you could use.
Keep bringing you that fire. All right, guys. Until next time.